Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on gold and the miners here, and in my opinion, you need to be well aware of what the overall S&P 500 is doing in the recent past few weeks. The inverse correlation between the market and gold has been extremely strong. So if you are trading the miners, you need to be watching gold and the market. If you're trading anything to do with gold or the market, you need to be watching both. And you can watch to see SPY. There's very, very clear correlations all the way down to the 5-minute time frame where if we see SPY get a bull break, the miners instantly pull back with gold and vice versa. So that's extremely strong, and it's definitely worth utilizing because oftentimes we can see patterns more clearly on the S&P 500 compared to gold, and it can give us some hints as to what to anticipate. For example, right now, SPY is forming a bull flag on the daily time frame, and we are anticipating new all-time highs in the near-term future. So we will be looking at the potential for gold to continue consolidating if that does occur. So if SPX gets a new all-time high, we're going to be looking for gold to head back down closer to the 1250 range, if not lower. So as of right now, we have a very clear pattern to be watching the past 3 days, and it's inside bars. And the inside bar is when the trading range fits completely within the previous candlestick, and it shows us a tightening range. So we have an inside bar on Thursday, another inside bar on Friday. This is going to break on likely Sunday night. It'll probably break before we get a chance to begin trading on Monday. So watch for that break. If we get a bull break of 1268.37, we're looking for some short-term upside. And if we get a bear break of 1262.96, we're looking for some short-term downside. So the break signals one trading day worth of action. So we can assume the bull or bear break will be good for that day on Monday. So when this pattern forms, it's an equilibrium pattern that I keep talking about on a shorter term time frame. It's just a macro zoomed out version of that. If you were to zoom into the hourly time frame, it's higher lows and lower highs on declining volume with a tightening range with a break imminent. So that's what we're going to see play out. And we look at the hourly time frame and we can see our high, our low, lower high, higher low. And right now, close to a bull break. We're closer to a bull break than a bear break, but it did not occur before trading closed. So on the weekly time frame here for gold, it's at this point, it's normal, healthy consolidation. There's no big red flags for the bulls on this bounce. We have our bounce, our higher lows and higher highs established, and this is coming after 5 green weeks. So it's no red flags at this point in terms of, the bears are about to take back over long term. Obviously, we need to be prepared for that in case the S&P 500 continues ripping to new all-time highs. But for me, it's this low down here of consolidation, 1239.53. If we break that level, it's a big for the bulls. If that level holds, there's really not a ton of worry at this point because it will continue to be higher lows and higher highs on this longer term pattern. So again, you look at that weekly time frame, and these 2 weeks of consolidation have not even given back the most recent bull week that we've had. So we've given back about 2/3 of one bull week in 2 weeks of consolidation, and the consolidation is on declining volume. So not ready to sound the alarm for the bulls. It all depends on whether or not the S&P 500 shows extreme strength in the near term. We do have a Fed or an FOMC meeting coming up, so definitely need to be aware of that as well. And the bulls need to see a bull break of these inside bars to start this coming week. So looking at the miners have been all over the place with the bears certainly in favor. GDX has been seeing, let's see, if we want to play the correlation between GDX and GDXJ is much stronger. That's partially due to the exposure to silver. Silver has been way weaker than gold over the past 2 weeks. And it's also partially because there's some interesting articles out there about how the ETFs here are really getting too big for their britches in terms of the amount of assets that they need to buy because of the amount of money that's seeing an influx into these ETFs. So that's a very interesting read. And I believe there's one on CNBC if you type in gold ETF CNBC into Google, and it should be one of the first ones that comes up. So what we have playing out here is a bounce attempt. It's a fairly weak bounce attempt at this point on GDX because we are rejecting from the exponential resistances. And once we broke these higher lows, that was the red flag for the bulls. The first red flag was 23.20 breaking. Second big red flag was the low of this consolidation, 22.51 breaking. As soon as that broke, that was a major red flag as this base of support that built for almost a month just was wiped out and the bears took over in a big way. So if we cannot get over these exponential resistances, the bulls are not going anywhere. Our support is 21.68. Our resistance is 22.43. And we have to turn these exponential resistances into support. Once we started this weakness, we saw a bear flag bounce attempt rejecting from exponential resistance, hitting lower lows, the weekly time frame rejecting from the 50-week resistance, but bouncing off the 200-week support. So we essentially have a channel between the 200-week, which has held multiple tests, and the 50-week resistance now at this point. And it's an equilibrium pattern. We have our low, the high of the bounce, higher low, lower high. Now the bulls are trying to form a higher low. So the bear miners, or the miners, I should say, are much weaker than gold overall. And we're going to see a clear break of this equilibrium pattern, which is going to be a nice midterm indication, but that could take another month before we get that break. The range that I'm watching right now on this pattern is 21.14 support and 24.88 resistance. GDXJ, look how much weaker we are. We broke the low of early March. This is the lowest price we've seen in over 3 months. And if GDX were in the same boat, we would be down under $21 right now. So over 5% higher than that level. And that is the amount of much more weakness that the junior miners have. So lower high was hit here. We never even broke the high of March. And then we dumped to lower lows. As soon as we broke 35.18, that was the big red flag for the bulls. Nothing but weakness since then. Same thing, upper wick of profit taking, rejecting from the exponential resistances. No real significant bounce at this point. The weekly chart is a completely different shape. We do not have a tightening range. We do not have higher lows. We have lower highs and lower lows. We are testing this 200-week support and holding it, but it is a much weaker chart than GDX, which still has support and is still in a tightening range. So I have not, in recent memory, I cannot recall the last time that the discrepancy between the junior and the senior miners was this clear, technically speaking. So the weekly time frame for GDXJ, very weak, trying to hold the 200-week support for both of these names, and we're going to have to see the bulls in gold show up. But again, there have been days where the gold bulls have showed up, and it hasn't done anything to help these miners. So really, the miners are not doing a good job for the bulls. It's all about that S&P 500 correlation. Keep a close eye and just play with it. If you see the 5-minute chart breaking out on the S&P 500, look at what the gold 5-minute chart is doing. And I'm pretty sure that you will very quickly be convinced that we need to be watching both in tandem to each other. So I appreciate you watching. I hope you have a great weekend, and we will continue checking back in. Certainly lots of trading opportunity in both direction on these miners. If you want to be playing the miners bearish, I suggest JDST. That is what I would be playing. And if you want to be playing the miners bullish, we're looking at NUGT. I appreciate you watching. Thanks again.